Welcome to the Don't Trade Fade Show with Jason Shapiro.
Hello, today is Saturday, February 17th, 2024. I'm Jason Shapiro with crowdedmarketreport.com. This week, I wanted to follow up with our Don't Trade Fade series because we have been tracking, I believe it's 5 portfolios to see how they do relative to passive portfolios with the belief that these portfolios are going to underperform. And I don't want to just pick times when it happens to be working. I want to follow up at least every 3 or 4 weeks on this. So here they are. The 5 things that we're tracking as fades are my friend Dan Nathan's trades. And we get that, it's impossible to track everything that he says and all that. But fortunately, there's a page here where he actually has to disclose his trades. So we were following those disclosures. And on day of disclosure, I'm taking the closing price for that asset as the execution price, since that's really all I can do. I don't know exactly the second that he's putting these trades on, but he does put it on that day. So we're taking that day close of his disclosure, okay? And then we are also tracking portfolios that I've spoken about, which is this CNBC consensus portfolio that I thought were the single most consensus trades coming into the beginning of this year, according to what the analysts were talking about. And then we did a Barron's portfolio, which was the Barron's roundtable, 24 stocks that they picked. They picked 27, but 3 of them were international, so we took 24 as their portfolio. And then to compare to that, we did 2 other portfolios with 24 stocks. One was a random generated ChatGPT portfolio where we just said, give us 24 names randomly off the S&P 500. And then there's one that's an alphabetical portfolio, which we just took the first 24 stocks alphabetically on the S&P 500, just to be as silly as possible. So the Dan Nathan portfolio is here. This is all updated up until yesterday's closing prices. So he's had these trades closed out, which he's lost. And I'm just assuming invest $1,000 in each one of these trade ideas. Okay, so he's lost $1,800 on those, and with his open trades, he is down $365. So in total, he's negative on the year. $2,100 and $2,188, almost $2,200 on these trades. With him, it's not going to be relative to anything. It's just going to be positive, negative. So far, negative. Okay, and that's putting $1,000 into each trade. He's down over $2,000 in total. Not great. For the rest of these portfolios, you have the CNBC Fade portfolio is up 2.35%. Which is, this is compared to the S&P. I'm comparing those two. So it's, over 3% worse. The best portfolio so far, first of all 4 of these portfolios relative to the S&P are losing, okay? All 4. The S&P's beating. The one that's doing best is the Barron's portfolio, which is only 158 basis points below the S&P 500. So I guess these Barron roundtable guys are really earning their fees relative to random portfolios, but are clearly not earning their fees relative to the S&P 500, right? The worst performing portfolio is the CNBC Fades, okay, which is doing worse than just buy the first 24 alphabetical stocks on the S&P. It's doing worse than that. The best, the best performing portfolio relative to the S&P is the ChatGPT. Just give me 24 random stocks. Hey, there's another victory for AI, right? Although we didn't say give us the ones we thought were going to outperform. It was just give me random stocks. So this was really the monkeys throwing darts at a dartboard portfolio. And that's doing better than even the Barron's people, okay? So that's kind of where we're at with this Don't Trade Fade stuff. Let me give you like a little bit of a graphical representation just for fun, and you can see which stocks are actually in these portfolios. But here's the Barron's Fade. Here's the 24 stocks that they chose. And here is the blue line is their portfolio versus the yellow line, which is the S&P 500. This is the consensus, the CNBC trade. So this is what was seen as the consensus CNBC trades for at the end of last year for this upcoming year, and they've had a good run actually recently. but still are, as you can see, well underperforming the S&P 500 year to date. This is the alphabetical, which has just been underperforming, a random thing. And here's the ChatGPT, which had a nice week last week for whatever reason and has caught up quite a bit. But the bottom line is all of these are underperforming the S&P. Okay. So far we see no value to thinking or acting or even throwing darts at a thing. The S&P beats them all. Right? The index beats them all. And Dan Nathan, who is our resident fade, just loses money. So I think to this point, we have seen that the data is proving the point of don't trade, fade, which means don't overthink, right? The best way to make money is just go opposite what the so-called thinkers are doing. So that's just a follow-up for that. I hope you enjoy. We will continue to follow this up every few weeks and see how it all does. And we will add maybe some new fades on there as and when they start to present themselves. Okay? So I hope everyone has a good week. I hope everyone has a profitable week. Please like this video if you liked it. And visit us at crowdedmarketreport.com if you'd like to see more of this type of stuff. All right. Thank you.
Subscribe to Crowded Market Report by Jason Shapiro.